Hello QuickBooks users, and welcome back to another lesson. This time we're going to look at taking out debt. In other words, what if we need to get a loan from the bank? So we're going to go to the bank and we're going to get a loan and we need to put that into the system. What we'll do is we'll use the method of a journal entry. So we'll go to New and then Journal Entry. Now we're getting money to put into the bank, so we're going to increase the amount in the bank. So let's say they just give us a check, but we haven't deposited the check. So we went to a bank and they give us a check for a loan, and we're going to put it in a different bank account because we have multiple bank accounts. So this is an undeposited fund. So we got an amount of, say, $5,000 for a loan for our business. So it's going to increase our cash account when we make the deposit. Let's say we want to tie this to the bank that we took the loan out. They're not really a vendor or customer, but that's our only option and employee. So we'll put them in as a vendor, and we'll put the name as ABC Bank, and we'll just save that. Now you don't have to use the name if you wanted to just do the journal entry without that. Then what we're going to do is we're going to show that we have a loan. So this is a note payable, and we want to use notes payable because this is a long-term liability. If we didn't have this account, then we would have to set it up as a long-term liability. So we have now the debit and the credit, and we can save that. If we get the check from the bank, then we go to our other bank to put the check in to increase our balance. We would just go to New and then Bank Deposit, and then we're going to put this into our checking account. So this is right. Make sure we have the right date. We'll just leave it as the date as it is. And then we're going to deposit this amount straight from the ABC Bank. We don't need a memo or any of those things unless in the real life situation you would want to add additional detail, then that would be fine. And we would save it and close it. And that's that for the bank deposit. Now, if you had received the loan from the bank and it went straight into your bank account, then you could have gone here immediately and just did a new bank deposit and then added the ABC Bank as received from, and then for the account you could have used note payable, and then the amount, whatever the amount was, we said $5,000, and that would have been a way to put the deposit in immediately if you had the money to deposit it at the same time that you got the loan. So either one of those works, just depends on the situation. I tend to like using the journal entries, but it's really up to the person that's using QuickBooks to decide what works best for them.